Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets on Friday, the 2nd of July. Starting off with a stock which some might find a bit sort of punchy, perhaps. Lek Oil, here we can see that the shares have broken that resistance there at 1.6, the initial, which was the initial June resistance. And end of day close or a weekly close above that, we could be heading up towards 4 pence, which is derived from the top of that triangle from the start of the year on the daily chart. 4 pence may be hit as soon as the end of next month, maybe a bit sooner, but watch out that the shares remain above that 1.6 pence level. Had a target which seemed to be rather ambitious around the 2.1, 2.2 pence for 88 Energy, but I think the news this week that the company's paid off its debts is certainly been a good look for the chart and on the fundamental basis. The view is that while we're above the floor of the gap, and that was at 2.15 pence, we could head up towards fresh high, which would be derived by the top of that gap there from back in March, as high as 3.5 pence, and maybe that might be hit by the end of this month. So above 2.15 up to 3.5 possibly by over the next 4 weeks or so. Taken a bit of time to consolidate, but MyHealthChecked looks to have broken that resistance line there from April. Been waiting for that for quite some time. That's around 3.6 pence, and we had that peak, late June peak there at 3.85, above 3.85 on an end of day close basis, and we could be heading significantly higher. The current rather ambitious looking target is a resistance line projection from March, and that's pointing towards 10 pence to be hit maybe as soon as the end of next month, but obviously we'll keep looking at that and monitoring the situation closely. Nice bullish divergence and bear trap type of rebound here from Ormond Mining, sort of bumping along the bottom since April, and the old low there, I suppose, around what was that, around the 0.95 level. While we're above that, looking for at least a return towards March resistance around 1.7 pence, and the stock emerging sharply from that falling wedge that we've had and the bear trap since April as well. So looking pretty strong there for Ormond. Looks like it's flushed out the last of the weak hands there. So up towards 1.75 pence over the next few weeks is possible, maybe by the end of this month. Good to see Angus Energy finally taking off. Here we've broken that April resistance, which was there on the daily chart around 0.9 pence. End of day close or weekly close above that today. Could be enough to give us a retest of that spike that we had at the beginning of the year around 1.5 pence, and the time frame on that perhaps as soon as the end of this month, hoping for a repeat of that 4-week run that we had December to January, when the shares went from 0.6 to 1.5 pence in pretty short order. On to Afriton, which I know is a company that quite a few people follow. Here we've had a long-awaited break of that resistance line from May. That was around the 5.2 pence level, so we can hold above that on an end-of-day close basis. Got an initial target around 6 pence, which is the June resistance and the area of the 50-day moving average. Looking further ahead, perhaps by the end of next month, up to 9 pence, which is that resistance line projection from February. And the upside value, while we hold above the initial July support around the 4.7 area, but ideally we hold above 5.2 over coming days. Nice bounce on news from Microsaic, a gap through resistance so far, resistance around the 0.25 area, so we're just above that at the moment. Nice to see. It would be nice to see that hold. Also be nice to see the shares remain above the floor of the gap there around 0.22. Well, we're above a 0.22, looking for a best case scenario target by the end of next month as high as 0.4 pence, which is a January resistance line projection. If you're cautious of the shares, maybe wait for a clearance of 0.265, which was last month's peak. So let's see if the stock can get above that over the next few sessions. I had a previous target here around 13.5 pence for i3 Energy, and the view was that if we could break that, then there would be a fresh leg to the upside towards 17 pence. That looks as though that could be hit by the end of this month. Obviously, we're waiting on potential dividend news early this month, so let's see if that pans out. Upside value while we hold above the floor of the gap there at 12.3 pence, so above 12.3, looking for 17 at the moment, but hopefully the shares can hold above yesterday's 13.37 pence low. Another oil stock, and obviously oil is booming at the moment, Pantheon Resources. There was the first signal here. Well, there's plenty of signals here actually, but I suppose a break of the 32 pence level late May peak was the first sort of signal on the upside. Since then, we've had an end of day close back above the gap down, a gap close signal, which tends to be pretty strong for stocks and markets. That was at 37 pence, and current situation is while we're above the late June peak there at 42.8 pence, we're looking towards 60 pence at the top of that rising October trend channel, and that could be hit as soon as the end of this month. Just a few stocks to go now. I'm sort of rather hesitant about looking at cellular goods because every time it looks as though it's going to rally, it fades away. The last peak there, which was last month's peak at 8 pence, so looking for an end of day close above that or a weekly close above that. Might not get it this week, but we have broken that line of resistance from April, which does suggest that finally the bulls are sort of getting some traction. And above 7.2, if you're a fan of the shares, then the best case scenario target here over the next couple of months is up towards 14 pence. But given the full storms that we've had, the many full storms that we've had here, it might be better to wait for sustained price action above 8 pence and maybe even a higher low above that level before taking the plunge. On to Vector Capital, which has been one of the dark horses of the week so far. Here we've had another gap close signal. So we had the gap down there in the middle of last month, and we've actually closed above that yesterday. That was around the 52 pence level. So end of day close above 52 has opened up the prospect of a top of January trend channel target as high as 75 pence by the end of this month. Let's see if that relatively obscure stock gets further momentum. On to a classic bear trap situation here. We had a low in March at 83 pence for touchstone exploration. Ideally, we get an end of day and an end of week close today above 83. If we can do that, then hopefully we've got an initial target here at 94, which is the 50-day line, and then up to the 200-day moving average, which has been post-April resistance up towards £1.20, and hopefully by the end of next month. Finishing off with Tuple, which just looks like it's peeking through above this resistance line from November, and the 50-day line, that was at 0.06 pence. Above that, we're looking for at least a return towards the 0.09 pence maybe by the end of this month, which clearly would be a reasonable percentage return. Good bullish divergence leading into this breakout, so it does look as though the shares may be finally on their way. That's it from me today. Perhaps a weekend update to come on Sunday.